Ira Epstein, and here we are on Tuesday evening, the 10th of February, 2026. Each day is a little longer. We're still full of snow here in Indiana, but it's starting to melt, and that's the good news. I talked to my friends in Chicago. It's only 45, 47 miles away, and their snow is gone, they say, but we're still here with it. We're on the other side of the lake where it dips back up. All right. So in looking at the markets, before I go anywhere, let's take a look at events for tomorrow. You have the Mortgage Bankers Association Index coming out at 6 in the morning, but the event of the morning is going to be the non-farm payrolls data. That's what you want to look at. They're looking for 55,000 jobs added. December had 50. They look for the jobless rate to not move around 4.4%, and they're looking for month-over-month increase of 0.3% on labor cost, and that goes up versus 3.7 year over year. We'll see. Remember, we're getting reports that labor costs are dropping, so we'll see if that shows up. You have two Fed members speaking tomorrow. You have Schmidt and you have Bowman. They'll be talking about whatever. Today we had other Fed members, and they're very much in line, today's members, as they were saying that they don't think an interest rate cut is needed right now, and they're bothered that inflation is staying up. They say that over time they think it will come down, but that's over time. Right now, the message between the lines, they don't want to cut if you don't need it for the labor market because it's probably going to cause inflation. And if that happens, then away you go again, and you're not going to get anywhere near that 2% number. When the COVID hit, I made a prediction here in these videos, this is years ago now, and I said once that all happened and the printing was going on, you weren't going back to 2% inflation. I think it's a fallacy number. I think they need to adjust more in the 3%. I'm not the economist they are, but after a while, if you can't get to your numbers, why are you sticking with the number you can't hit? The EIA petroleum stocks, that comes out at 9:30 in the morning. All right. So as we take a look at where the market's at and all this, it gets fascinating. First off, President Trump again threatened to move now another carrier group, a second one, into the Mideast. He's very determined that they are not going to have a nuclear weapon, that being Iran. Israel's President Netanyahu will be in the White House tomorrow, and Israel's demands are pretty clear. They don't want to see long-range missiles, and they want this funding of trouble groups, as they're called, stopped. They're not going to get that, and they're probably questionable what they can do with the missiles. Now, it does behoove the United States to join them on that missile thing. They're not saying that Iran can't have missiles to defend themselves, but maybe the range of them is what has to be done. And obviously the U.S. is looking at its own bases there as well, saying, what can they hit and how do we stop that? As for the nuclear part, if Iran thinks it's going to win that battle, they'll be seeing the other carrier group. As you can see in the metals, a little bit of everything happening early on. The stock market's up. I told you yesterday I thought the markets would break today because normally if you have a strong Monday, you get a weaker Tuesday. It's just the way that it typically works. Yale Hirsch pointed that out many years ago. I read his book backwards and forwards and learned about that. And when you get a strong Friday and a Monday, it generally means that. This morning, it wasn't breaking, it wasn't rallying, it wasn't going anywhere. The end of the day is when everything happened and fell back a little bit. And I use the word a little bit. In the dollar, well, we'll see how the market responds to the jobs report. Currency shouldn't do very much tonight. I think they'll all want to watch and see what that is. So as you're at the S&P, for the week so far, we're up 1/3%. So volatility's not in the market at this point. And you see that here. You've got this big break, you've come back up, and you're sort of sitting. In the pattern of the chart, you have a higher high and a lower low. That's the beauty of a swing line. A swing line looks at 5 possibilities from the day prior or the bar prior. It could be a 5-minute bar chart or 15, it doesn't matter. And they're taught in my charting course, and then I created the formula so it just can go into the charting software. We make this available on TradingView, our QT, LTP, and QT itself. So we have a lot that you can get it on, and it works pretty interesting. When I look at the chart, you've got the market over the 18-day average of closes in red. So I use the 18-day average as a filter. When the market's over it, I have an automatic upside bias. And if I'm getting sell signals, I don't take them. If the market's under it and I have the swing line down, I'm very interested in sell signals. So that's one of the ways you look at it. In terms of Bollinger Bands, whenever I see a market get under them or above them, I back away. Now, if you've had a market that embeds, and I'll show you that in a moment here, embedding is like this. When the market's both numbers are going over the 80 level, if you get to a Bollinger Band, you take off part of your position, not the whole thing. But if you're not embedded, I teach, why not just wave bye-bye? And I know you're going to say, but that's when the market's going to make the big move. Yeah, every now and then. You heard what I said. Not often. Every now and then. I'll give that up. Trading is about percentages. And if you think you can trade every day and make money, that's great. Most people can't. I have clients that I watch what they're doing and I'm amazed. These guys are good and I'm impressed with what they're doing. Very cool if you can get that done. When we take a look at the NASDAQ, lower highs, lower lows. So we're not out of the woods in this market. The resistance is right in front of you, the 25.52 to 25.53 area, the 100-day average in green and the 18-day average of closes. The Dow is the powerhouse, 30 stocks. Industry is what's making it work. The rotation away from the high tech into the back to the industrials, a lot of the other parts of the market coming live, not software. And as you can already imagine, even NVIDIA's not going anywhere. NVIDIA hasn't made a big move one way or the other now in months. Not a short period of time, many, many months. When you come to the Russell, there's part of the rotation. People buying into these lower price stocks thinking that the Fed will help them out. Well, I'm not convinced that's the case, and I'm not buying into that whole argument. I think the Fed is caught. I don't think they can drop interest rates very much on their own because that inflation hasn't gone away. I agree, if the bottom were pulled out of the labor market, okay. But we're not seeing that in the Dow. We're seeing those companies, excuse me, are still acting pretty good. In the DAX, it's a little bit of everything for everybody. Up to the upper Bollinger Band, down to the lower band, making a run for the upper band. Momentum trades, not trend trades. There's a huge difference between the two. When you come to the Treasuries, this has been trending to the upside, which means lower rates, but this is your problem area. You're now at the 100-day average in green and the Bollinger Band, and you're overbought. Bye-bye, Miss American Pie. When you come over here to the 2-year note, you've cleared the 100, you're staying up, but it too is in overbought territory. I don't think you're seeing a lot of fresh buying in the markets up there. In the dollar index, I'm a bear. I think the market wants to go lower. I think you've got to wait your turn to get in. I called when the market was over here that I thought this would go to the 18-day average, and I thought the euro would go down to its 18-day average, and they both did what we thought. Now I'm saying I think you can be long the euro or short the dollar. I don't think you do both. Pick which one you'd want. Remember, the dollar index is 57% of it is made up of the euro. You don't want overly weighted. Lower low, higher high in the end. So this has been coming on ever since the election ended. The initial reaction was bearish. The banks said they'll intervene. They warned traders on speculating down, and the policies got to get passed, but they're coming. So it's nice to see this market rally, though, and could be going to the 100-day average. Is there anything here that says you should be long? I don't think so. Is there anything that says you should be short? I don't think so. I think this is just an observation market. In Bitcoin, it is still in the bear camp, or is it? Well, it lost its bearish embedded reading. I told you yesterday, and I'm not changing my opinion, I think the pros are buying it here, stops under this low, to see if they can get it up to wherever the 18-day average comes and meets it. That's what I think is going on. And on the energy markets, you're overbought, but when you hear another carrier group might be headed somewhere, you've got to pay attention. it's just too difficult to be a hero in that type of market. The trends are up. They're overbought in both Brent and WTI. You're correcting a little bit in the harbor, in the heating oil. That's really what it is. And maybe you can get to the support at the 18-day average, but the overall trend remains up there as well. Now remember, if you want to keep up with the different things we do and how we do them, just go to our website at iraepstein.com. The different courses I have to teach you how my analysis fits in and why it fits in and what I do and why I do what I do. I think you'll find it all there. The research, you can click up here as well. You can click here, just iraepstein.com. Have yourself a great evening. I'll catch you in the other videos and first thing in the morning, and I will do a morning video. You have a good one.